divorced, you cannot do an equity buyout or a loan assumption until the divorce is finalized. And historically, the attorney says, okay, who wants to keep the house? Someone says, I do. And they don't figure out whether or not it's possible. That's what I want to change. I don't want someone to have to make that change in mind shift after it's all said and done.
Welcome to another episode of the Simply Retirement Podcast. I'm your host, Eric Blake, practicing retirement planner for over 25 years, founder of Blake Wealth Management, and I would not be the man I am today without the women in my life. On today's episode, I'm going to be joined by Stacey Ellison, certified divorce lending professional and divorce mortgage planner at Divorce Mortgage Solutions. Stacey works with individuals navigating divorce and helps them understand the financial realities around home equity, mortgages, and housing decisions that often become part of the divorce settlement process. Today, we're going to talk about divorce mortgage planning and why understanding your housing options early in the process can make a major difference. This is especially important for women who may suddenly find themselves responsible for major financial decisions during divorce or any other major life transition. Stacey, welcome to the Simply Retirement Podcast.
Thank you, Eric. Thank you so much for having me. I'm happy to be here.
Absolutely. I'm so excited to have you. We had a chance to chat a few weeks back, and you shared so much great insight. I'm looking forward to the opportunity for you to share that with our audience as well. But if you would, before we dive into some of these topics, can you share just a little bit about your background, what led you into the work you're doing today, and more specifically, how you came to focus on working as a divorce lending professional?
Sure. So I've been in the mortgage industry since, like the dawn of time. I started as a loan processor. It was my first big girl job out of college with a psychology degree and not going to graduate school. So I started working as a processor. I've been a loan officer. I've been an account executive. Basically, since like 1996, I've been in the industry with a little break in 2008 when everything exploded, but I'm back. And I've done everything from processing to origination and account management. And around 2019, 2020, I had several people come to me who were recently divorced, looking to do an equity buyout. They said, I need to refinance. Here's my settlement agreement. And it was within 6 months, I must have had 6 or 7 clients like this. And every single one of them had challenges, whether it was qualifying income, it was, you name it, we ran into roadblocks all along. And I do not like roadblocks. I do not like not knowing how to help people. I don't like taking no for an answer. And so in my research, I ended up down this rabbit hole of divorce lending, and I discovered that there's a certification in it, and it's a real thing, and there's a real need for it. And the Divorce Lending Association offers the certification, and I got it, and I've been helping divorcing homeowners figure it all out ever since, so that you don't go through all of the loss associated with a divorce, wanting to keep the house, fighting to keep the house, and then not being able to, and having to go through a whole nother cycle of loss and heartache and trauma. So that's kind of what led me where I am.
That's perfect. Well, I think what's really important to distinguish is that you actually serve 2 different roles in the work that you're doing around these divorce-related mortgages. And I think it's important for listeners to understand both of those as well, because on one side, there's this work that you do as a mortgage planner, where it really is helping people understand their options, how housing decisions fit into their divorce settlement. And then, of course, on the other side is somebody actually getting a mortgage. And I think one of the things we discussed when we first talked, and I think it was that amazing spread. I'm a spreadsheet person, so I think it was that really cool spreadsheet that you showed me. But going through that divorce and mortgage planning, it doesn't necessarily mean that somebody's actually going to get a mortgage at all from you. Can you talk about those 2 different roles and how they serve clients in different ways? And I think also where ultimately they do come together as maybe women are coming out of divorce, or how they're making these big decisions going through the divorce process.
Sure, of course. So divorce mortgage planning is the process of evaluating mortgage options through the lens of a divorce. underwriting guidelines change when a divorce is present. And using that lens and that perspective and applying it to the settlement agreement allows me to help people be prepared for what assuming a mortgage looks like after, or doing an equity buyout looks like afterwards, but also being involved with the divorce team to make sure that the language in the settlement agreement is not going to conflict with underwriting guidelines. There are requirements in terms of what constitutes qualified income, and whether it's alimony or child support or the distribution of assets. By being involved early, I can help the settlement agreement and the language that's in the settlement agreement make sure that it's going to be in alignment with underwriting guidelines once the divorce is all finalized. Because you cannot do an equity buyout or a loan assumption until the divorce is finalized. And historically, the attorney says, okay, who wants to keep the house? Someone says, I do. And they don't figure out whether or not it's possible. And that's what I want to change. I don't want someone to have to make that change in mind shift after it's all said and done. If it's not going to be possible to keep the house, better to figure that out up front, or better yet, figure out a way to keep the house.
Well, I think that was one of the things, again, being a spreadsheet lover myself, I think that we actually walk through some different scenarios of, okay, if you look at it this way, it's just not doable, but just some small tweaks, maybe what I call lever pulls sometimes, just these little small lever adjustments might actually put you in a position to where you can keep the house.
Right.
And you've already touched on it a little bit, but in terms of just starting early in the process.
Yes, definitely. And that's where my experience in the mortgage industry, my familiarity with the underwriting guidelines, gives me that knowledge base to say, okay, well, a conventional loan isn't going to work here. We have to look at FHA, or we have to look at asset depletion, or we have to look at some other strategy to create usable income so that you can qualify, and that the mortgage and the housing fits into the overall financial stability long term. Because the other thing is, you don't want to just help someone keep a house now and have them have to sell it in 6 months or a year because it doesn't fit into the long term plan.
So where do you typically fit in? So if we're talking obviously the importance of starting the process early, but is it somebody where they're going through divorce and they reach out to you? Is it the attorney, the mediator that brings you into the picture? Where do you actually come into play?
It can be all of those. I have referral partners. I have attorneys who bring me in. I have financial planners who bring me in. I have people who find me on my website or on one of the groups I'm in, or one of the podcasts I guest on. Whether they're in the middle of the divorce or just thinking about it or just filing, the only time it's too late to bring me in is when you've signed on the dotted line.
Well, I think one of the things you shared with me that I think is really valuable is that, and I talked about it earlier as far as the difference between the mortgage planning and the actual mortgage itself, is you can actually do the planning work separately from the mortgage itself, which I think is really critical.
It is, and it also gives objectivity, right? Because I'm not giving advice with the intent of getting the loan. No one's under any obligation to do the lending part with me after the fact. They can take the report and they can go to anybody at all. Most people do,
right?
But because I can't help them with that, and we've been through the whole thing, and it's a long process, and we get a good relationship going. But there's no obligation, and I make sure that's crystal clear up front.
Again, I think it's such a valuable service because one of the things, when we're working with clients, we see that the most expensive financial decisions are usually the ones that are made before we really understand the long-term consequences, or of course, when there's motions and emotions involved that it might be driving that decision. And actually divorce is one of those situations where, these big financial decisions, they're happening quickly, these housing decisions, equity decisions, refinancing decisions. So before we get into some of those specific topics that people face, I just want to talk a little bit about the planning work a little bit further and thinking about, one of the biggest questions people face is whether to keep the marital home or to sell it. So what factors do you think someone should be thinking about before deciding whether keeping the house actually makes sense financially?
Budget, um, what they're comfortable affording, because generally they may be comfortable with the mortgage as it is, but if they're keeping a house and there has to be an equity buyout, then then their mortgage balance is going to go up to take that cash out unless they can equalize it with other assets. But looking at all those different options and numbers to find the most affordable, comfortable way to fit it within the long-term financial plan is really the biggest concern and the biggest key.
Well, then I also want you to talk about, this is one of these challenges we faced over the last couple of years that maybe wasn't as big of a problem a few years ago, and that's the interest rate environment. So actually one of the realities that is facing a lot of people today is that the mortgage that they currently have on their home may have a very, very low interest rate as compared to today that they may have locked in several years ago. Again, with today's mortgage rates being much higher. So how does that change the conversation when someone's trying to decide whether to keep the home, refinance it, or possibly buy a different home after the divorce? What are some of those considerations that you have to look at when we're talking about today's interest rate environment?
Yeah, because it's not just as simple as I'm going to keep the house and let's just remove the X. Like you can't just do that. It could be possible to keep the interest rate that they have. It would be a loan assumption. And because of the market and the way things are right now, many traditional lenders are allowing loan assumptions, whereas legally, the only loans that are quote unquote assumable are FHA and VA loans. The conventional loans, with the way the market is, many investors recognize that divorce is a life event, and some of them, a lot of them, offer the availability of an assumption, but it's not guaranteed. Like not every bank does. So the first step, if you want to look into assuming the loan, would be to call the current lender and ask if that's even an option. Some banks do, some banks don't. It really depends. And then trying to, loan assumption assistance is one of the services that as a CDLP I can help with, because navigating that process for the average person who doesn't have the knowledge of the industry, it's going to be a nightmare. You can't process your own mortgage without knowing what to do. So that's another area that I can help out and guide people through that assumption process if that's the best option for them. So I explore all of the options. Like, here's what it would look like if you did an assumption. Here's what an equity buyout would do. Here's what some purchase, if you're going to buy something else, we can run scenarios for that. With an assumption, if you can't take any cash out, it's only the mortgage balance that's in existence. So you would have to have another way to pay for the equity buyout. So that, that's part of the conversation that I have with people as well.
Well, and I think one of the interesting things that, and I think maybe we touched on this when we first spoke, was that it doesn't mean, even though you may have a lower interest rate, it doesn't automatically mean you shouldn't consider transitioning to something that may have a higher rate, either because maybe you have equity in the residence that you can utilize to bring down the total mortgage balance.
Right.
So are there any other examples you would share where, it may, even though the interest rate may be higher, it still might make more financial sense?
Right. So if someone has, like, say, a 15 or a 20-year term that they took out, 10, 15 years ago, and there's a much lower balance, refinancing to a longer term, even at a higher rate, could generate more cash flow and make it more affordable. So, like I said, we look at all of the options. I give them, all the numbers, all the possibilities to make the most educated decision that someone can make for their home equity options.
Yeah, I think that's just having the insight that somebody like you can share, where again, the decisions aren't always as obvious as what they might think, simply looking at interest rate versus interest rate. So getting in a little bit more to what I would say a focus of our audience would be, a lot of the clients we work with, the women that listen to the show, they may not have been the primary income earner, or maybe they weren't involved in the mortgage process originally. What are some of the challenges you see when someone needs to or wants to qualify for a mortgage after a divorce? What are some of those big challenges or roadblocks that could pop up?
The biggest challenge I see in the gray divorce arena is someone who hasn't been working and doesn't have an income to qualify. And a lot of times there can be a lump sum payment instead of monthly alimony support. And so there's really no income to utilize to qualify. So we look at other loan options and solutions like an asset depletion loan, or if someone's of retirement age, setting up automatic distributions from that retirement fund to use that as qualified income. It could also, another option could be a single annuity, immediate annuity.
Okay.
I'm not a financial planner, so I might
talk
on what it's called, but an immediate annuity account. So I work with the financial planners to see what is going to work best, tax wise and income wise and account wise, to create qualified income to use for the mortgage, whether it's a purchase or an equity buyout.
Hey everyone, it's Eric. Hope you're enjoying today's episode. I want to take just a quick moment to share a resource I think you'll find valuable. Have you ever found yourself asking, how much can I put into an IRA this year? Or how much can I earn before my Social Security gets reduced? Those are the kinds of questions that come up all the time, and the answers change often more than you think. That's why we created a free 2-page tax and retirement planning cheat sheet, updated for 2026, with the key tax, Social Security, and retirement numbers all in one place. You can download it right now at the simplyretirementpodcast.com/retirement cheat sheet. It's a simple reference you can keep handy whenever questions come up. Now, back to the episode. Well, and I think that it just comes back to the point that, what you're saying and what a lot of the other guests that I've had on have talked about is how important having this team around you becomes, where it's not just the divorce, or it's not just the divorce attorney, it's not just the lending professional, it's not just the financial advisor, but you're always going to be best served by having the team and having communication among those team members that ultimately is going to work out best in your favor. And it sounds like that's very much the case here as well.
Oh, 100%, 100%. And by taking advantage of divorce mortgage planning, you're not leaving the outcome to chance. Not being like, we'll see what happens, like, because you're not going through all this just to see what happens. You want to know what the outcome is. You want to know the steps that have to be taken. You want to know the structure and the language that needs to be in the settlement agreement. And you want to make the most educated decision possible to align with not just your wants and needs right now, but the long-term financial plan.
Well, that leads me into my next question, where, where do you see people unintentionally creating more stress or financial difficulty for themselves during this process? So obviously, I always see one that's always pops up as the emotional piece of that's where my kids grew up. It's where even though maybe getting divorced, we were in this house for 30 years, or, whatever the case might be. So actually there's that emotional component that can creep in there. But what are some of the other things that people unintentionally, or maybe it's just a lack of awareness, besides not having the right team, what else might be some of those challenges?
I think just not keeping an open mind and having the blinders on and just being like, I have to keep the house. And I know it is emotions. There's a lot going on, and it's easy to latch onto that one thing. But being open to the other options could really put you in a much better position, possibly. And just other than that, like, get all your paperwork together, get a trusted team together. It's a lot harder to just don't wing it. Some people are like, I don't know. I'm going to do it myself. Like, okay.
I've never heard that before. I've never heard about doing DIY investing or financial planning or retirement planning.
Right. So.
Awesome. Well, and you've already kind of touched on this, but I wanted to go just maybe a little bit deeper on the gray divorce, silver divorce, because that is, statistically, We see some of these articles and things that are out there around divorce rates going down, but the one area that has increased over the last several years is that gray and silver divorce area. So thinking about qualifying for a mortgage, if you're in that scenario, we already talked about, asset depletion, but can you talk, like, what is an example of what that means? So when we're thinking about, when I'm as a financial planner focused on retirement, we're looking at, maximizing retirement income, utilizing retirement assets effectively. So just what is an example of how asset depletion might be a way of fitting that into your mortgage planning?
So let's say we've got a situation where there's not going to be monthly support. It's a lump sum. They get $1 million, that they get, and it sits and it's in an account. They're not working. They don't have a monthly support income. So how are you going to qualify? Well, what underwriting would do is they would take the asset statement and divide it by the number that they do it in, and a couple different investors do it differently, but and use that amount as qualifying income. So even if there's no income coming into the house, let's say if it's $1 million and it gets divided by 84 is a lot of times the number that they use, by 84, that would be an income of just under $12,000 a month that underwriting would use to qualify. So that's one way. And they're saying that you would need $12,000 a month, and that would last 84 months, and that would be the income. Does that make sense?
Yeah, I think so. Yeah, and I think it's just to give people an idea of it, that just because I'm not working, I don't have an employment income, doesn't, and again, immediately eliminate you from qualifying for a mortgage.
Right.
Might have to be a little more creative or utilize your assets more effectively rather than just focusing on income.
And if it's retirement income, if it's qualified retirement income, then you would say, okay, you get a letter from the financial planner saying that if it's $1 million, you're getting $12,000 a month, show one distribution of it. And as long as that there's 3 years worth of payments in there to utilize, then that's considered qualified income. So whether it's retirement income or non-retirement income, there are accounts there are loan programs that we could use to qualify.
Well, I want to throw one more thing in there, and if this is kind of going off down the wrong path, let me know. But one of the things I always talk a lot about Social Security, especially when you're on the other side of divorce, depending on if the wife may not have worked, they may have been a caregiver for the children when they were younger, or maybe even now being a caregiver for aging parents. So Social Security planning becomes really critical, at least from my perspective, around, especially after divorce. Where does Social Security fit into that equation as far as qualifying for a mortgage?
Social Security is definitely considered qualified income. You'd have to be receiving it, so you have to show the award letter and a 1099 and, bank statement showing it going in. That's it. So Social Security, pension is also qualified income.
Okay.
Right. Because that doesn't change. So whether you're getting that from your employer or an ex-spouse employer, you get an award letter, you get a 1099. That's definitely income that can be used to qualify.
So really, it's just kind of, I've always talked about the retirement income puzzle. It's very similar, it sounds like, to what you do as far as, again, how do we fit all these pieces together to see if it's reasonable? Does it make sense for you to qualify for mortgage? Or do we just have to, unfortunately, simply go a different direction? It might have renting for whatever reason.
And then the sticky area comes with the support, if they are getting monthly support income, because that you have to show a 6-month history of receiving it, and there has to be a 3-year continuance. So depending on the language in the settlement agreement and how that's structured, that may or may not be qualified income. But there are a lot of different strategies to use and a lot of different resources to pull qualified income from, depending on each person's situation.
And just out of my own curiosity, so where do you have any input into that? Again, if you're going to, okay, we're working on this divorce settlement, do you come into a point where you would have input as to, hey, that support doesn't last long enough for this person to qualify? Maybe can we reconsider? Can we look at other options or different split of assets, whatever the case might be?
Absolutely, absolutely. Because traditionally alimony was awarded for a 3-year period. Well, that doesn't work, right? Um, so I would definitely be like, hey, you need to talk to your attorney about this because as this is structured, it's not going to count as qualified income. And then they can go back and negotiate and balance it out and all of that if it's needed. If it's not needed, and there are other ways to qualify, I'm like, I'm not going to pick fights and cause waves if it's not necessary. But if it is necessary, then obviously we want to make sure that everything is in alignment in the settlement agreement.
Well, but it's a perfect tie-in because I wanted to come back to something we talked about from the very beginning, and that's your expertise in this divorce lending process. You talked about being a certified divorce lending professional, a CDLP. Can you explain a little more about what that is, what qualifies someone to earn that designation? And of course, actually why someone navigating divorce would want to work with somebody like you instead of just a traditional broker or lender.
Yeah, so as a CDLP, I've been through intense training on all aspects that of divorce that are related to the home. So I have training in areas of family law, um, tax law, real estate, obviously mortgage guidelines, um, and financial planning. But I stay in my lane. I just have an understanding of these areas and how it all interacts because when a marital home is on the balance sheet, it affects all of those areas. And because mortgage financing guidelines change when a divorce is present, it's important to have that perspective of how each of those areas could have an impact on the success of financing after the divorce is finalized. Um, Without preparing and without realizing these things, there's a lot of ways that the settlement agreement can have long-term effects on whether or not someone can qualify for a mortgage. Um, so even if someone's not looking to purchase a home immediately, they might want to purchase a home down the road. And protecting that avenue of successful financing is very important to do during the settlement agreement. Otherwise, like I said, it could affect someone for years.
Right.
Traditional lenders, they don't have this insight. They don't have this training, and they can't do a loan until you go to them with the settlement agreement in hand, right? So it's two very separate practices. There's divorce as a divorce lending professional, divorce mortgage planner. I'm a divorce professional who offers guidance and knowledge in the mortgage arena, in the financing arena. As a loan officer, I take your application, I process your loan application, I get your approval, I help you get to closing. So they're two completely separate processes that each have their own place in the grand scheme of things.
I think that's a critically important distinguishment between what you do and just what the traditional lender might do. So are there any geographic limitations as far as who you can work with, what states you can do your work in?
I can do divorce mortgage planning anywhere in the country. As far as loan origination, I'm here in New Jersey. I work for a credit union. And as long as I can make someone a member of the credit union, then I can do a loan anywhere in the country. But I also have resources to refer if I can't do a loan for someone and they need help, if they don't have someone. I'm happy. I have colleagues that can lend anywhere in the country, and I'm happy to make sure that everybody's taken care of rather than just be like, here's your report, have a nice day.
Well, and again, I think that divorce planning component is so huge. Again, just from what you showed me, just again, the small little lever pulls, it might make a significant difference in your ability to qualify. So if somebody wanted to learn more about your work or connect with you, what's the best way for them to do that?
My website is divorcemortgagesolutions.biz. You can find me on Insta as Divorce Mortgage Solutions. I'm on Facebook as Stacey Ellison, Certified Divorce Lending Professional. Or give me a call at 908-229-2705.
That is perfect. We'll be sure to include all that in today's show notes. Stacey, thank you so much for joining me. This has been great. Really important topic. And as always, I want to thank our listeners for tuning in. If this conversation resonated with you, or if you've been trying to determine what the next best step might be when it comes to housing decisions during a divorce, I would definitely encourage you to reach out to Stacey to learn more. Housing decisions made during divorce can have these long-lasting financial consequences, as Stacey talked about already. And having the right information at the right time can make a huge difference. So again, we'll make sure we include the links to Stacey's website and all the resources in today's show notes. That's it for today's episode. For all the links and resources mentioned, you can visit the simplyretirementpodcast.com. And until next time, please remember, retirement is not the end of the road. It's the start of a new journey.
That's it for today's episode of the Simply Retirement Podcast. We hope you found our insights and advice helpful in planning for a fulfilling retirement. Don't forget to take action on what you've learned today. Visit our website at blakewealthmanagement.com to learn more about our firm and review our Simply Retirement Roadmap process to get you on the right path to the retirement you deserve. And don't forget to click the follow button to be notified when new episodes become available. Thank you for joining us on this journey, and we look forward to helping you achieve your retirement goals. Remember, retirement is not the end of the road. It is the start of a new journey. So embrace it and make the most of it. Until next time, take care. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security, or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Blake Wealth Management. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Blake Wealth Management or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor, Blake Wealth Management, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.